Welcome back, folks. S&P is up by 65, NASDAQ 100 up by 230 right now, and we do have yields rising with that 10-year up to 4.51. And as we do on Fridays at 30 past the hour, folks, we're going to jump over to our man Besfort Behluli, and you can reach Besfort, the website, folks, for Tiger Real Estate, tigerstpete.com. You can jump over there, of course, and we'll have Besfort's number up there, and you can always just email me, Tommy@TFNN.com, to get you in touch. Besfort, good afternoon.
Hey, Tommy. How's it going?
It's going great, man. I appreciate you coming on the program. So let's jump into it, Besfort. What are you seeing? It's been a couple of weeks, and boy, I was talking to you earlier today saying we got rates spiking today, but they've been pulling back. We're still only at 4.5 on the 10-year in general. We pulled back a little at almost 4.3 on the 10-year. But what are you seeing right now? Maybe we kick it off in terms of mortgages, rates, and then just talk to us about the market and what you're seeing. I know you're talking to people every day. You're doing showings out there. You have products, places on the market. What are you seeing?
Yeah, so, right now, as we all know, the rates are the toughest part. So I think we spoke last week about this. I have a client, over 800 credit score, and the rate he was getting was still 6.75.
Yeah.
So this is huge, right? So, and then, APR too comes into effect as well. So this is pretty high. And then you add in the mortgage and the taxes, and, it gets pretty tough to buy, most properties out there right now. In this case, he was trying to buy a triplex, and he was going to live in one of the units.
Okay.
But, after you put, all those numbers together, still didn't make too much sense, but I think he's going to go move forward with this. So over 800 credit score, and, the rate was still at 6.75.
Oof.
So pretty high, yeah.
And, and of course, folks, you got the mortgage, but then you have, and we talk about it all the time, especially when you're talking about, and it's a phenomenal plan, folks. I was fortunate in Tampa. I got a duplex. I lived in one side, rented out the other. It's an amazing opportunity, and that's great. So is that what that person is doing best, or they're going to take that as their own home, right? So they'll be able to get, ideally, a 30-year mortgage as a personal residence while they're purchasing a multi-unit?
Yeah, that's what they want to do. They want to live in one of the units and, rent out the other two.
Yeah.
And so, in that scenario, a lot of things are cheaper, especially interest rate as well as insurance as well. So insurance is through the roof, and we'll talk about that a little later. So
yes. No, but it makes sense. I just want to it makes sense because it's, for if somebody's buying a multi-unit, folks, for an investment, there's obviously a higher likelihood that they're going to default than if they're buying it to live there themselves. So that's part of the reason why you're getting a mortgage at a lower interest rate. And, we want to encourage home ownership. But I tell you, folks, as somebody that got in, I wish I had done it. And hindsight, we live in. I'm okay. The regret. But we all would have. In terms of buying property, Besfort, every single year, right, from 2013, 2014. But for those young people out there, there is an opportunity there, man. You get into, I think if I could do it again, and, things are so high like you're talking about right now, but if you need somewhere to live anyway, every single year, you need to live there for a year. And if your life circumstances change, okay, then yes, you can usually move. But when you get into a mortgage, what I think a lot of people don't even know, Besfort, is that it's only a year, though. You could literally get into a 30-year mortgage, and you could tell the bank that I'm going to live here for a year and a day. And they'd be like, no problem. That's in the terms. As long as you're going to live here for a year, we're going to give you a 30-year mortgage, right? And so it's a cool deal. And I was fortunate. But, hey, you got to time the market to a certain degree. And, boy, it's very difficult to do it at these rates and at these housing prices, and you combine them, right?
Yeah.
Let's talk about insurance because, the debt's enough, and then you have escrow on top of it. And what are you seeing in the insurance market right now? I know we talked about that as well.
Yeah, earlier I ran into an article where it was saying that the average premium in Florida is about $6,000 a year, compared to the rest of the United States. I think it was just under $2,000. So, Florida, we're getting hit pretty hard with the insurance. And then, on top of that, these prices are so high that your taxes are a lot higher as well. So it's just a combination, of really expensive payments, going on here.
Yeah.
Yeah.
And I guess people can always try and get some quotes out there, right? Because you really do got to be proactive. And it's kind of where we've been dealing with this before, of course. And it's like we We had the roof deal, just the insurance deal, and now you have the hurricanes that are always an ever-present thing. But it is interesting, Bester, and I just had to pay insurance for one of the properties in St. Pete, and that was about $6,500, like you're talking about, insurance. And this particular property, folks, needs a new roof. So, it's interesting you bring this up, though, Bestard, right? Because I just dealing with this, and you know the property I'm talking about, okay? So that insurance, $6,500 was the insurance that I just paid on that property. And I'm saying, you know what? That's not too out of whack for a large house that it might need a new roof, and maybe I'll get the roof and revisit it. But it's amazing, $6,500. So I was like, man, and it's a larger, older house, folks. It is. But that's like we're talking about, trying to make sense on a cash flow perspective. Boy, you're talking about a big house with a mortgage, with insurance is $6,500. You got taxes or I think $7,000 maybe on that house. So right away, folks, you're paying $13,000 or $14,000 just for taxes and insurance. And then you're talking about you got a debt service, a $600,000 house, easily. Very difficult to make that one happen. Yeah.
Now here's some interesting things about new construction. So since we're talking about insurance, so all those tiger homes that you guys built, the insurance quote we would get, and they wouldn't, because they're brand new, basically, that we didn't even need to do an inspection on them. They were all under $2,000. So we're talking about these big, beautiful homes over $1 million, and you're only paying like $1,750 a year for insurance for those homes.
Amazing.
So,
and they were block homes, right? Yeah, beautiful block homes. That my dad is building. Windows, we're building.
Yeah. So that's another thing too, that you can end up saving a lot of money by buying a new construction home. Not only that, but you save a lot of money on electric and everything else.
Exactly. I was going to say, and the house we're talking about, that I'm talking about, folks, is an old house. I mean, I think it was built in the 1920s. Okay, may have even been owned by Al Capone at some time. I'm not kidding.
Yeah.
But it's and my dad, I remember him telling me, Bester, the same deal. Those new houses, because we were dealing with an insurance crisis in Florida, of course, and he's saying, it's wild, man, the new ones, but that's because they're so well built. You got the beautiful windows, of course, the storm windows, the block building. Pretty wild, but you add it up, and then the electric.
This particular house, the 6,500 one, a few years ago, it was paying $14,000 was the insurance quote.
So I'm getting a haircut at 6,500. Yeah.
By shopping around, you gotta wait.
That's it. Yeah. All right, let's finish this up, folks. Stay tuned. We're gonna talk more real estate. We got the S&Ps up by 63, Nasdaq 100 up by 218. Don't go away. Bester and I are coming right back. Welcome back, folks. Tommy O'Brien, Besfort, Behluli. We check back in on the markets. S&P's up by 62, Nasdaq up by 216. We check in on Tesla, and Tesla up by $11 right now, up 4%, but we've given back some of those gains. And let's talk a little bit of land, Besfort, if we can. I know we're always talking lots. I know you have, of course, some lots for clients that you have up there. I'm always dealing with some lots myself, but talk to us for those investors out there. We got a lot of investors that like in terms of lots, land, development, builders. How's that going?
Yeah, so there's a lot of action out there with lots, and what we're seeing, at least in the Tampa Bay, Pinellas County area, is there's just a lot more lots available because of all the houses that flooded, right? So not most of them, but a lot of these guys are just selling their house for the land value, and they want to get out. A lot of times these houses were so small and so old that it's not really worth fixing anymore. So they're just getting out. So, there are lots in some areas have been impacted, where they are going down. But other areas, as you know, Tommy, they're going up. So it's all about location, where you are. And I just listed 8 lots in the Port Charlotte area. And interestingly enough, I only had one that was flood zone X, meaning not in a flood zone. And the other were all in a flood zone.
Yes.
Guess what? The one that wasn't in a flood zone sold within a day. The other ones, not so much luck. So, location and flood zone is a big factor as well right now.
Yeah. And if you're around this area, folks, especially anywhere in there, it's a traumatizing deal, to put it lightly. I mean, I remember last October, Besfort, right as it happened, my dad was doing a open house, and I believe you were there, and we had people showing up that had literally, folks, they were right like inside or outside the flood zone, but they were literally on the line, and they were literally like the house or two down flooded, and they were like, it's time to get out. We're going to buy a different house. Even us, it's obviously a scarring deal that people are living with down here. The other side of that is that you build it right, which is why those lots are going. You build it right, and a lot of those lots, prime lots in terms of being near the water in Florida, and maybe you just spend the money for a high-end property. And on the luxury side of things, people are doing okay, right? Yeah,
some great areas there. Yeah, they're very nice neighborhoods. These were some of the homes that were built in the 50s and 60s and 40s. One story, so they all pretty much got wiped out. But around it, you have these multi-million-dollar houses. So these developers are going all in, tearing these houses down and building up, and there's still a huge demand for new construction, as you can see. We see it as soon as a new construction goes up, and as long as they price it right, because sometimes they go a little crazy on the price, but as long as it's priced right, it goes pretty quickly. So new construction is still in high demand. As we talked last time, these homes that they need a lot of work. They're having a very hard time, understandably. It's just too much work.
And as I was just looking at it, I was taking a look, because we were talking about the numbers, right? And you're talking about the numbers of a multi-unit, and we all kind of know it. But just looking at, I just pulled up a mortgage calculator, Besfort, and I put in a home value of about $650,000. I said maybe somebody puts in actually 20%. So that means you got to come to the table, folks, with $130,000 right away. You're getting 6.48. It just generated the number in there, so about 6.5%. I just wanted. You're paying $36.54. A month is your monthly payment. And what's remarkable there, though, is that you're talking about annual payments of $43,859, and that doesn't include, what did we just say? Insurance could be easily $6,500. That gets you to $50,000, and then you have taxes in there. It's a beautiful $650,000 house, folks, and especially if it's an investment property, it's not going to be homestead. All right, you're paying $7,000 or $8,000 in there. So and then we haven't even talked about fixing anything. Okay, so we're already at $58,000 with taxes, insurance. And it's a big number, folks. It is.
Yeah, and I will go even higher on the taxes. I will probably go.
I'm trying to be like conservative, to say, and then this is a house that I just might put a roof on right now. That's $21,000, let alone right. Not even doing that. But let's just say you come in with a property that's new, like we're talking about. You can see why people want to, folks. Right? If you're in the market selling a place, Besfort and I talk about it all the time. Get it perfect, man. You're not going to get the money back. You're not going to make money on the money you spend, right? Which normally might happen. You come in, you put in a kitchen, you put in a brand new roof, you're just going to be able to make sure that house gets sold at a market reasonable price, because people don't want to spend the money when they're already stretched on the payments, which makes sense.
Yeah, and everything is so expensive, as labor, material, and most of these guys are so busy too, the contractors, that it takes a long time too to get anything done. So we're definitely seeing that, everything kind of stretched out, but things are still chugging along, and hopefully we don't have a bad hurricane season this year.
No, that's always, and make sure you're protected for insurance, folks, because you never, make sure you got what you need in terms of the shutters, because if you're around in this area, man, the devastation that we saw last year, of course, and you can't necessarily prevent flooding, but boy, do what you can, because it is a real deal, and it's always like spikes up, man. Make sure you're protected. Insurance. Listen, I was paying that $6,500 insurance bill, but you always pay the insurance bill, right? It's like that's not even close, man, in terms of what you're risking out there coming into hurricane season, of course.
Yeah, and just remember, if there's an active hurricane out there somewhere, you won't be able to buy an insurance, so you got to do it before something's happening.
Yeah,
so don't wait.
And make sure you're protected, folks. Take a look at whether it's your deductible. Sometimes you can look at what you're dealing with, whether you're at a 5%. I think
that's a big one. Yeah, between the 2% and the 5%.
Yeah,
that's a big one. So look into that, and sometimes it's not that much more, right?
No,
to pay between the 2 and the 5, because it's a big difference when the deductible hits. So
it is. I remember looking at that myself. Yeah.
Yeah, because I had a client like that. Yeah, they chose a 5%, and their deductible was over 20 grand. So
Yeah.
that in basically what they needed to be done was under 20 grand. So they got no
Every
money.
time you're going to end up paying it almost, right? Exactly.
Yeah,
Where it's like
yeah,
you're going to, a lot of time. I mean, put that in context, right, folks? So you're talking about you got a deductible that's 5%, okay? You got a roof that needs to be redone for 10 or 15 grand. Yeah, you're just going to be on the hook for all of it. That's a mass, it's almost an emergency plan, which that in itself is okay, all right, because you probably got more than 20 grand in equity in your house. But boy, I don't think a lot of people realize, Besfort, that they're paying for insurance out there, and they're going to get a bill potentially, and they're going to be responsible for it all, just as their deductible. Yeah.
Yeah, it's huge. Always got to read the fine print.
Oh man, and yeah, I guess we're always watching this yield market. We talk about it, man. And what do maybe the last? Do you talk to people? How are they getting over these rates? Are they trying to say, because your person that's getting into the multi-unit, that's a tough one. They got to live somewhere, right? What is that person doing? Are they saying I'm getting in now, maybe rates come down, or are they just saying I'm not renting anymore?
I think there's a lot of people that are just on the sideline, and some of them are just kind of sick of waiting. So they want to get going, see what happens. And I always tell people, if it's a decent property, decent deal, just go for it. You can't lose.
And you're putting the money in the rent anyway. Part of that payment is equity, as small as it is, and that you're getting back. Well, Besfort, I appreciate it so much, man. Thank you so much for the update. Folks, give Besfort a call.
You.
If you need to reach him, just email me. If you can't find it, I'll send it over. Tommy at TFNN, and we'll talk to you next week, Besfort. Have a great weekend, man.
Thank you. Have a good